Hello guys and welcome to Hakman Traders. In this video I'll be showing to you guys what should you do about FOMO. So what is FOMO? FOMO. So what actually it is? So FOMO stands for fear of missing out. The assumption that you might miss a certain trade at a certain time, or you miss an entry point, an entry point in a certain stock, or a stock that is about to move in a upward direction, and you will lose the chance of you'd lose the chance of you'd miss the trade at that moment. So that is known as FOMO. So how should you avoid FOMO when you're trading stocks? So this happens most of the time, like you miss certain stocks, you miss great trades in the stock market. For trading stocks, this happens, this is normal. So you should not be that much worry about it, because there are more chances than missing out. If you miss a certain chance or a stock, it is no problem, move on to another stock. Maybe you will find a greater opportunity, greater chance of not missing out a certain trade. So so for this purpose, let me show you of what you can do while trading stocks, or how should you not fear out something that you say that it would move out. So let me show you an example of how I am I do not care about FOMO. So let me show you this chart. In this chart, I've currently invested from this point. I've invested in this stock on 31st of May. I cannot show you the balance, the sheet or the report that on which I've it's in my mobile phone, so I cannot show you of how it's done. it, it's because of some privacy. So I've invested in this portion, and you can see of how the stock came down up till this point, and I've still didn't sell the stock. I'm holding on to this, and now you can see it moved upward. So I bought at this point. So my initial price was this one. So now, so again, the price was, I did the averaging, and the price came down up till this point, 10.02. So I bought the stock again at, would you say, 10.02. Where is it? I bought the stock on the averaging concept. So my would be this. So it would be this. So in this manner. So it is like this. So I do not care about how what the stock does, but I only know that this stock would go upward. It would go in the upward direction. As you can see, it is below the 200-day moving average, and it is also below the Ichimoku cloud. So for the Ichimoku cloud, if I tell you one thing, you can see at this point the gap is narrowing at this point, and the stock, you can see, is it enters into the indecision phase. So I'm now waiting for it, and if it goes up and trading upward, maybe if it doubles. So I'm waiting for it, to give me some positive results of how the stock will perform. So whatever you do, whatever however you trade stocks, trade on the trade the stocks firmly, and stick to your plan. Have a plan in place that would work in your favor. Like in those cases, I'm sure, 100% sure, that this stock would go upward. So that type of courage, or that type of what you say that assumption that you should have, that this stock would go upward 100%. So you should have the same concept as well, the same passion, or whatever you call it, and then you would know of how the stock would perform, or how you won't miss out any fair. So again, if you are still not sure about a certain stock, or certain stock that would go upward in prices, do not I would suggest that do not invest in this type of stock, as it moves up and down. For one way to recognize this type of stock is shift the shift the 9-day moving average to 200-day moving. So do not invest in this type of stock. Always buy in stocks for which it is trading at the lowest, because there is one way for the stock to go, and that is upward. The stock would go only upward, not more than downward. So if it goes downward, you would face less loss, and if it goes upward, if you buy at this point and the stock start to come down, so For this you will lose a lot of money, like you would lose a lot. But if the stock is at the down portion, at the downside, then there is no way for the stock to go but upward. The stock will go upward, so that is for sure. Always invest in this type of stock, so you won't have that fear of missing out. You won't miss out anything because you have invested at the downside, not at the up, not at the highest highs. You would invest at the lowest low. The lowest low is a point at which the stock does not go any further down below. There is one way for the stock to go, and that is upward. So try to invest in these type of stock for which you will gain more profits and you will lose less money. So keep this in mind. Like, these are some of the things that you should have to set up for yourself. Like, these are the things that you'll have to set up for yourself. And you can see that I've already set up. This is my stop loss. It went below the stop loss, but I didn't care. I've held on to this stock and it shooted up. So I'm waiting for it, for the stock to grow in value, so that I can make profits out of it. So you can see that it is trading below the 200-day moving average. I've placed my risk to reward ratio, the stop loss. This is my support level. In this chart, this is the Ichimoku cloud. It is trading below the Ichimoku cloud. Now it enters into the Ichimoku cloud, the cloud itself. So now wait for it, for the stock to grow, to get above the cloud edge. And for this point, you can see the gap between these two, the between these two lines is narrowing. So this will move upward, and there is no way for the stock to go but upward. So those are some of the things that you should keep in mind before trading stock. Like, you should know for how the like you should know for FOMO, like fear of missing out. Do not fear for missing out, because there is no such thing as that. It's only like you use one opportunity, you get another. So this is how it works, and that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market or the forex market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.